to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Bangko Sentral Governor Eli Remolona says inflation exceeding their projection of 3% raises concerns. Meralco proposes a 247 billion peso spending plan in its rate reset filing. And one of the Philippines' biggest universal banks, BPI, delivers another record year, albeit with slowing earnings growth. TG Limcauco, BPI President and CEO, joins us live. Bangko Sentral Governor Eli Remolona says inflation rising above target is a bigger concern than falling below it. Speaking before the Management Association of the Philippines, Remolona said inflation is expected to hover around 3% over the next 2 years. That's right at the midpoint of the central bank's 2 to 4% target band. The BSP chief stressed he is less concerned about inflation dipping below 3%, but worries more if it climbs above that level. Headline inflation rose to 2% in January, an 11-month high. That's up from the 1.8% print in December, but below the 2.9% posted a year earlier. While price pressures have eased since 2023 highs, Remolona flagged weaker growth as the main challenge after it slowed to 4.4% last year, below government targets. He added that while confidence is not coming back as fast as policymakers would like, the Bangko Sentral expects conditions to normalize by the second half. The Philippines slid to a new low in the Global Corruption Perception Index. In the 2025 report released by Transparency International, the Philippines had a score of 32, which is a point lower compared to 2024. This score, however, ranked the Philippines 120th out of 182 nations. It is the country's worst showing since the index began using the 0 to 100 scale in 2012. In 2024, the Philippines was at 114th place with a score of 33 in the index, also lower than 2023. The report described the Philippines as a climate change-impacted country following the flood control corruption scandal last year. The report based its ranking from external data, including the World Bank, the World Economic Forum, risk and consulting companies, and think tanks. One of the Philippines' biggest universal banks, BPI, is coming off a fourth straight record year, but with profit growth normalizing and rate cuts changing the landscape. BPI is also issuing and listing with the Philippine Dealing and Exchange Corporation tomorrow, Friday, its 2-year, 5 billion peso denominated fixed-rate BPI Sigla bonds. Well, with us now for more is TG Limcauco, President and CEO of BPI. It's good seeing you, TG. Welcome back to the program.
Morning, Cathy. Good morning.
All right, so first, your earnings outlook for the year. Your press release here mentions the phrase sustaining positive jaw. Positive jaw in bank speak means gross income growth exceeding expense growth. But for how much longer, DG, can you do so? Generate revenue efficiently without increasing expenses, given slowing economic conditions?
I think, Cathy, that's something that we aim to do year in, year out. We have gotten our expenses to be something more reasonable. In the last couple of years, we've been investing a lot in technology. 4 years ago, our technology spend grew 25%. Last year, our technology spend only grew 12.8%. So our technology is on track. We've got the right stack. And that will really allow us to keep our expense growth lower than our revenue growth. Revenue growth last year was 14.8%, and expense growth was 9.9%. Our budget this year is for expense growth to be about 10%.
All right, but we're clear that earnings growth is clearly going to be slower than the past few years. So how would you describe where BPI is in this cycle? Do you think it's normalizing or entering a tougher phase for bank profitability?
I think we're coming to a more normal phase. In last year, our net income grew 7.4%. That actually is quite a decent performance for us, given the events of the second half of the year where things significantly slowed down. I think what's going to happen this year is that we're entering the year quite cautious, but I feel that the sentiment can turn very quickly. And if it does, then business can pick up very quickly. I think the sort of malaise we have really today in the economy is about uncertainty and lack of confidence. But I think that's something that can turn very quickly because there's nothing structural wrong with our economy.
That's good to know. But what sort of metrics, though? What sort of factors do you need to see to say that the sentiment has shifted and pivoted?
Well, I take a look at the top corporates beginning to build up, I guess, their working capital again and begin to start drawing on their lines for their investments. The consumer remains fairly resilient. We're seeing billings and spending continue to grow. We are seeing a little bit weaker, probably in mortgage, given that during the pandemic, a lot of the real estate companies stopped projects, and we're going to feel that this year. But other than that, we'd look to the consumer to follow where the corporates are going and where job creation and the GDP growth actually turns more upbeat than the 4% we saw last year.
All right, so consumer's going to be the driver, but you've got other levers here. You've got SME, the corporates, or the fee-based and the digital ecosystems. So given, say, 1 or 2 years, where do you see growth coming from the biggest?
We'll continue to grow our consumer book quite significantly. And Cathy, for BPI, when we talk consumer book, that includes SME. So we consider what we call our institutional book, which are top corporates and multinationals. And then everything is the non-institutionals, which is SMEs all the way down to personal loans and, I guess, credit card billings.
But how comfortable are you with the risk you're taking there with the consumers? And where do you think you're being most conservative today, given that the turn hasn't come and there's still a lot of uncertainty?
I guess, Cathy, people have to understand that what BPI is trying to do now is be a more inclusive bank. And therefore, we're opening our facilities to a broader market, a market that typically we had not served maybe 10 years ago. And there's nothing wrong with higher credit costs for as long as you're pricing it correctly. And the reason you're able to price it correctly is because we have the data and we have the products that cater to these segments. And so if you have a non-performing loan of, let's say, on the credit card business, which is about, in our books, about 4.5%, as long as you're pricing it correctly, we can extend our credit card, let's say, availability to more and more segments of society.
Well, let's get into those NIMs, the net interest margins, as you made a mention of pricing those loans. It's been strong at 4.6% as of September last year. Will you still be able to keep that intact, do you think, with the Bangko Sentral easing policy further? And which segments are showing the earliest signs of stress, if any?
Yeah, typically, theoretically, as the Bangko Sentral lowers policy rates, interest rates will fall on the asset side. But I think people have to remember that in the immediate term, what falls first is the liability side as time deposits fall quickly. And time deposits in the Philippine context have an average life of 30 days. So that falls very quickly. Whereas our corporate loans typically have a repricing of maybe 6 months. And then consumer loans are much slower because we have, auto loans are fixed for the next 5 years. Mortgages are fixed for 1 year or 5 years. So the asset side falls much slower. The bank also is focused on expanding our loan base to be more focused on what we call the consumer non-traditional, which is a higher yield. So we're looking at over the long term, maybe a 25 basis point cut will reduce our NIM by about 4 basis points. But in the immediate term, we hope to sustain it by expanding our loan book to be more consumer oriented and by being very disciplined in our pricing for corporate loans and for time deposits.
Let me pick up on discipline. Are you tightening standards in products like, say, auto, credit cards, or even the unsecured lending before the stress shows up in the numbers?
Yes, we do tighten up as we see NPLs rise and as we see the inability to raise interest rates because of competition. So naturally, you'll have to make that trade-off between who you lend to, the risk that we're undertaking by lending to this segment, and of course, the rate we're able to charge them. So it really is dependent on competition. If competition is very tight, then there are some segments we will back away and let our competition take them. There are other products that we are just entering now and are able to tap into our network and our distribution channels to tap a larger market. For example, teachers' loans, we've grown that significantly over the last 2 years.
Could you give us more color there? That's pretty interesting. A very niche sort of offering you have. How's that contributing to profits?
You know, Kathy, our public school teachers are one of the most devoted workers in society. And together with the Department of Education, there is a program where we are able to lend to teachers, and it's paid out of their salaries. That is a business that was with Robinsons Bank. But as we merged with Robinsons Bank, what we have been able to do for teachers' loans is grow it fourfold over the last 2 years, because we have a much wider distribution network today. We're able to use all 800 branches of BPI to access and inform the teachers and give them access to this product. But it's been a win-win for both sides, both for the teachers and for BPI.
But even if you've got maybe one more cut versus a longer pause, I mean, how sensitive is loan demand going to be, especially for, say, new products like teachers' loans, if we get one more cut?
The demand, I think if you have a cut and we're able to reflect that in the rate, and teacher loans are actually quite reasonably priced and affordable, you'll see more demand.
What about the easing and at least one more cut expected? How much of a margin pressure are you bracing for still? And what sort of levers do you have to defend your net interest margins?
So 2 ways, as I said. One is we will, obviously, the first impact will be lower time deposits or lower funding costs. That should allow us to expand the NIMs in the short run, very short run. But over the long run, theoretically, if your loan book doesn't, if the shape of our loan book doesn't change, then we lose about 4 basis points in the long run. But we will try to turn more and more towards consumer loans, which have a higher yield, and try to negate the effect of a cut. So we're hopeful we can keep NIMs.
What about the credit margins? Very interesting this year with the potential increase in the interest rate differential between the Bangko Sentral and the Fed.
Mm-hmm. Well, if the BSP delivers a cut next week as expected, 25 basis points cut, you'll see the smallest differential between U.S. policy rates and Philippine policy rates ever. It will be down to 50 basis points. Even today's differential of 75 is a record low. And there's confidence that our currency can hold with this 50 basis points cut. And I believe the BSP is looking at cutting. I think most analysts are looking at the cut really to spur economic growth. There's some concern about inflation, but with inflation today where it is, I think there's room for that.
Do you think there's still room? I mean, he just said about 24 hours ago that he'd be concerned if inflation tracks above their projection of 3%.
Yes, so that was a surprise from Governor Ellie, given that their target is 2 to 4%. But the mandate of the Bangko Sentral is price stability. So they have every right to focus on price stability over economic growth. Our forecast is 25 basis points cut next week, and another 25 sometime down the year. So 50 for the full year.
Well, as a banker, what do you make of the communication that he's put out there over the last couple of months? Pretty mixed signals, haven't they been?
No, I think he's giving more direction, more clarity on what he believes the mission of the BSP is. And actually, from my perspective, I like the way they communicate. I like the way they're talking about their thinking. And for me, the clarity on their focus on the BSP's mission is good.
Final point, TG, I know that you've got your Sigla bonds. You've got a public offering of a 2-year, 5 billion peso denominated fixed-rate BPI Sigla bonds. It's quite a mouthful, but what response are you expecting when they're issued and listed in the PDEX tomorrow, Friday?
Yeah, the Sigla bonds are 2-year bonds that we're issuing. We had a lot of demand, and we're issuing a total of 50 billion. We had planned to issue 5, but the demand was so great, we're issuing 50 billion, and that's listing tomorrow. So thanks to everyone who participated. It's part of our strategy to diversify our funding, and the 50 billion that we're raising is really to be used for social bonds, ASEAN social bonds, which really are being lent to businesses to help the social enterprises.
So investors should expect more frequent social or sustainability-linked bonds from BPI?
I think we are using bonds now as a strategy to diversify our funding. So yes, people should expect that over time we will be issuing more bonds. Not necessarily social bonds. Some might be green, some might be blue, and some might be plain vanilla.
All right. Well, thank you so much for the insights there. DG Lim Kauko, the President and CEO of BPI. And you're watching Money Talks. Coming right up, is the Bangko Central's easing cycle already built into the price of local equities? We'll post that question and more to Endro Mendoza of Frankfurt Financials. Keep it here on One News. Money Talks. I'm Cathy Yang. Here are the headlines from around the globe. In the U.S., the Republican-controlled House narrowly voted against President Donald Trump's tariffs on Canada by a vote of 219 to 211. Lawmakers approved a resolution terminating Trump's use of a national emergency to raise levels on Canadian goods, with 6 Republicans joining all but 1 Democrat in favor. It's a rare Republican rebuke of the president's signature economic policy. But the vote is largely symbolic because the measure will be vetoed by Trump. In Canada, 8 people are dead at a remote part of the British Columbia in one of the country's worst mass shootings in history. The 18-year-old has a history of mental health issues. She allegedly killed her mother and stepbrother first before going to school and shooting 6 more people. The motive remains unclear. Canadian Prime Minister Mark Carney has ordered flags to be flown at half-staff for 1 week, saying, quote, "We will get through this." And Dawson's Creek star James Van Der Beek has died at the age of 48. His publicist did not state his cause of death, but in November 2024, Van Der Beek revealed his battle with colorectal cancer. Van Der Beek skyrocketed to fame with his role as Dawson Leary on the hit teenage drama Dawson's Creek, which ran from 1998 to 2003. Checking in on how the markets are trading, U.S. stocks were muted this Wednesday as AI jitters continue to put pressure on software and financial shares. The Dow ended its record 3-day winning streak to edge lower yesterday by 0.1%. The Nasdaq also slid by 0.1%, and the S&P 500 stayed on the flat line. The benchmark 10-year Treasury yields ticked up 4.17%, and gold prices jumped to $5,071 per ounce. Stock futures are moving sideways in after-hours trading, with the Dow and the S&P rising by less than 0.1% and the Nasdaq falling by 0.1%. Asian markets are all up this Thursday, with South Korea leading those gains. The Kospi's up nearly 2%. Australia's ASX 200 climbs by about 0.5%, and Japan's Nikkei 225 advances by 0.4%. And a look at our own markets. PSEI opens this Thursday higher by about 0.3%, 6,517. The stock market climbed to its highest level in 7 months, up by nearly 0.4% on the back of bargain hunting. The broader all-shares index rose by nearly 0.4%, with local counters mostly in the green. As for the Philippine peso, it opens today stronger, 58.18 to the dollar. Peso closed at a 4-month high at 58.29 to the dollar as the PSEI jumped on the news of better FDI figures. And 10-year government bond yields ticked down to 5.962%. In corporate news, Meralco has proposed a capital expenditure plan worth about 247 billion pesos for the period 2027 to 2030. The power distributors said the investment will fund network upgrades, asset relocation, and technology projects. Meralco is planning to spend around 51.8 billion pesos in 2027, rising to over 73 billion pesos by 2030. It is also projecting a total revenue requirement of more than 532 billion pesos over the 4-year period. The proposal forms part of Meralco's application under the Energy Regulatory Commission's new rules for setting distribution rates for private utilities. The Australian ambassador to the Philippines has met with Jollibee founder Tony Tan Caktiong as the Filipino fast food giant eyes expansion down under. In a Facebook post, the Australian embassy said Ambassador Mark Innes-Brown recently met with Caktiong and Jollibee Foods Corporation executives to discuss the company's domestic and global growth plans. Earlier reports showed plans for a store in Campbelltown, Sydney, but that site was scrapped due to administrative concerns. Still, Australia remains a top priority market, with Sydney the leading candidate for Jollibee's first branch targeted to open within the next 2 years. And joining us this morning is Enro Mendoza, the Vice President of Strategy and Business Transformation of Ramper Financials. Good to have you back on, Enro. Welcome to the program.
Good morning, Miss Cathy. It's good to be back.
All right, so you've heard TG there, TG Limcaoco of BPI. What stood out from what he said, from your perspective?
Yeah, I think as one of the leaders in the Philippine economy and especially in the banking industry, it's very nice that he's very strategic. We see the established businesses, companies really making sure that their strategies from the years past, they're able to do more. So in terms of their policies, in terms of their business models, they're actually investing in technology, making sure that we're relevant in the years to come. So looking into the economy as a whole, these are the companies that, our traditional names, BPI, and all of our other known names as well, Meralco investing in the future, making sure that their businesses stay relevant.
The thing is, it's doing more in a slowing economy, and I'm wondering from your perspective as somebody who manages money, and a lot of the millennials and the young, how do you do that? Get the biggest bang out of the buck?
Yeah, I think it's a very different conversation than what we had last year, wherein the global funds, global companies really led the charge in terms of AI and technology, and we see that, especially in the US, it kind of slowed down. So fund managers are looking into Asia, especially the Philippines also. So the past months, we've been looking at a net positive foreign buying. So they're looking at first, of course, our known names, right? Our BPIs, our ICTs, our Meralcos, and especially here in our Philippine economy, we see that the fund managers prioritize the infrastructure companies.
Yeah, let's take a step back and dive into that, because when you gave us your chart, it was really surprising that your top performing fund for the whole of 2025, and let's just pull that up, happens to be an infrastructure fund.
Yeah.
And it happens at a time that we had a lot of problems with the corruption scandal, public spending slowed, along with private construction. But guess what? You did what? 12.7%.
Yeah, actually, this
12.5% of a growth.
This is year to date, 2026.
Year to date, and benchmark up against what is it? PSEI?
I believe BPI would have their own internal index for infrastructure, but then usually what barometer we use for the local funds would be the PSEI.
Right, but how did you figure that out? When everybody was staying away from infrastructure, that's where you put a lot of the money.
Yeah, I think we see that because of, I guess, what's happening in the US, what's happening globally. Fund managers are a bit more strategic. They want to diversify, so they're looking at emerging markets like the Philippines, and also in Asia, we see that the Asian markets are doing well so far in 2026.
Right, but that narrative kind of is put into question with the second best performing fund because it's involved in, I believe, the SDGs. If we take a look, and push back, take a look at the next chart, because it's interesting that the biggest net returns there happens to be in SDG. Is that correct?
Yeah.
And it happens at a time when there's a lot of pushback from America.
Yeah, this one is Atram Global Technology. So we see that in 2025, that was really the narrative. We're looking at the Magnificent Seven, the Amazons, the Metas, the Nvidias, really leading the charge because of industries that are not present in the Philippines. So we advised our clients to diversify, still look into the Philippines, of course, because we want to bring in more volume and investment in our local economy. But now we're in a good place because, yes, they're diversified, they are in global funds, but we're now looking hopefully at a recovery year for the Philippines and really have the foreign net buying back in our local economy.
Well, correct me if I'm wrong. I'm looking at the first chart here. The SDGs are no longer here. I mean, did you change that last minute? I mean, is SGG represented as one of your top performing funds?
Yeah, I think that was Feb 9, and then we updated it as of Feb 10. It's now the indexes and also the MSCI. So what this shows us is it's not just the large caps leading the charge, it's also the mid to large caps, which is around 85%.
Okay, so what I'm seeing here is, correct me if I'm wrong, the time to look at the Philippines is now.
Yes.
The focus is really the valuations because it's cheap.
Yes.
But what have you got to back that up with?
Yeah,
There's
I think
ramp up, the catch-up still happening, and the governor himself saying that recovery will happen in the latter part of this year.
Yeah, I think what we advise our clients is really have a long-term vision. Now that they're diversified in the global funds and also in the local funds, asset allocation is really key. And asset allocation is, the best strategy in the long term. It's the most successful investment strategy. So, yeah, be patient. Look into the index, and also as another secondary strategy, look into dividend-paying funds so that while you're waiting, you're actually rewarded by the dividends of these healthy companies.
Okay, so how do you see this changing then for maybe the second half of the year? What's it going to look like? If somebody were to come to you and say, draw me up a portfolio, is it going to be a little bit more different than what we have now, or similar?
I think on the global side, it will be interesting because it's an efficient market. So we see that hopefully right now it's relatively flat as of February, but in the next few months, let's see how that will ramp up as well, because technology is still the hot thing right now. And yeah, a lot of these companies are investing a lot, like your Amazon would be investing heavily in their AI infrastructure. On the local side, yes, it's still be patient. We're not saying that we will arrive an all-time high in the near future, but we advise our clients to really look into asset allocation, like which investments are they putting in their money. And we see that from our fund managers last year, it didn't perform as well as our US funds, but they were also on the positive while the PSEI was on the negative. So imagine if it were a better market, those fund managers would have a relatively easier time to outbeat the pace of the PSEI.
Final point, asset allocation, is it stocks over bonds or equally weighted for both?
Usually it's a rule of 100 we advise our clients. So the rule of 100 is 100 minus your age should actually be the allocation into growth assets, like your stocks, your equity funds, and such, while the remainder would be on your conservative positions, which is your fixed income, your bonds, corporate, and government. So that as you age, as you move towards your retirement, there is still room for growth, but then you're more conservative because, of course, you want to ensure that your retirement fund is intact.
You got me there with the age. I got to do my computations after the show. Thank you so much.
Thank you so much, Ms.
Appreciate
Cathy.
the time, Enro.
Thank you very much.
Enro Mendoza of Ramper Financials. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.